Hello, everyone, and welcome to today's Technology Tuesday, hosted by Out of the Box Technology. We're excited to bring you these free webinars that feature third-party apps, tips and tricks from in and outside of QuickBooks, and hot topics that our industry is encountering. My name is Jennifer Darachuk, and I'm going to be your moderator today. I work with Out of the Box Technology in business development and customer relations, and I'm very proud to be the host of these webinars that we deliver to you about twice a month, sometimes more often depending on what's going on. So I'm happy to have you here today. And a little bit about Out of the Box Technology. If you're not familiar with our company, we specialize in QuickBooks training, integration, hosting, and support. We also do bookkeeping services and website design for franchises, franchisors, franchisees, small businesses, large businesses, you name it, we're there for you. We also do custom app development and data migrations. Now today I am very, very excited to have Matt with us from Avalara. A couple of weeks ago we had an article in our newsletter, on the new sales tax rules for remote sellers. There was a case with Wayfair on how these changes are going to start impacting you. So we've asked Matt to jump on with us today and kind of dig deeper into this topic. Because like I said, I know it's a hot topic for everybody. We had a lot of interest in that article. So at this time, Matt, I'm going to hand things over to you to get us started.
Awesome. Thank you, Jennifer. I really appreciate the introduction, and hopefully this will be beneficial for everybody on the call today. So I'm going to share my screen, and this will not just be a bunch of PowerPoints. We're going to make it interactive. If you have any questions that pop up throughout the call, please go ahead and type them in the Q&A on the GoToWebinar, and we'll be sure to address those as we go along. Jennifer, just real quick, you can see my screen with the Avalara and the Out of the Box logo, correct?
Yes, I do. Thank you.
Okay, awesome. Perfect. All right. So again, thanks everyone for taking time out of your day. We're really excited about Technology Tuesday. We're going to talk a lot about, Sales Tax 101, online selling, what that means, what happened in the court, what's changing with legislation, and really the aspect as a whole of staying compliant and selling and collecting and remitting sales tax, and really what's changing, how it's going to impact you or an end user or a CFO or a controller, or anybody who's involved in sales tax for their business, or if they're using technology platforms that do invoicing or they're selling online. So we'll cover a lot of those things today. My name is Matt Hammond. I've been at Avalara for over 4 years. I work directly in the QuickBooks market, and we run the small office, home office division here at Avalara. So again, any questions that pop up, please type them in as we're going along. Learning objectives today, a couple things. So why should you care about sales and use taxes? What technology solutions are available to assist for Technology Tuesday, which is great. What type of solution is right for your organization? And then what can you do to ensure a technology project is successful? So not a lot of folks that really know that there are third-party providers out there that can help with sales and use tax, and Avalara just happens to be one of them. And we've partnered with Out of the Box Technology for quite a few years now, and see them at a lot of the same trade shows when we go on site to Intuit. So know them very well. Great partnership, great offering, and we're excited to be working with them today. So just a little bit of overview, right? Well, with sales and use tax, it is no fun. It is not a revenue-generating activity. It will make your business no money. But it has to be done right. It has to be addressed. You have to make sure you're doing your best to keep up with a lot of things. So there's over 12 to 13,000 taxing jurisdictions across the United States. What's really important is, are the products and services you're selling taxable, right? They may have exemptions from state to state or even customer to customer. If you're selling to people that are not the end user, or they're going to resell your product, or they're a manufacturer or distributor, and for any reason they say, hey, you don't need to charge me tax, you have to make sure you have those exemption certificates on file. So heaven forbid you go through a sales tax audit, you can prove why you didn't charge those customers tax. That's a big, big part of our industry. Oops, excuse me. And then obviously you have taxability differences from state to state and county to county, and we'll talk about a couple states that are very challenging when it comes to sales tax and product taxability. A lot of things that are important, the who, what, where, when, how, why. who are you selling to? Is that customer, in fact, a taxable person? Are they the end user? Sales tax is derived from where goods are being shipped. We'll talk about some exceptions during the presentation today. When the invoice date, do you need an exact determination at that time? Where? So the ship to, ship from, do you have a taxing authority or sourcing rules for those particular states where you're selling to? And then also what, right? Is the product or service in fact taxable? Does it itself have any exemptions that need to be taken into effect when you're going to make that tax determination? So, and this is one of the big topics. So I'm going to spend a couple minutes talking about the Wayfair of South Dakota. I have another sheet that I'm going to pop up once we get through the demonstration and just show so everybody has kind of a visual for what it means. So economic nexus is really what just changed, and then the state challenged Wayfair, and they tried to overturn a rule, which they were successful in so far, at stating that you don't have to have a physical presence in order to collect and remit tax. There's about 20 states right now that actually have some form of economic nexus, and when we get towards the end and I go through my live demonstration, I'll show you those particular states, what time frame they're looking at to imposing this, and why it's going to be important. And basically on June 21st, the U.S. Supreme Court fundamentally changed the rules for collection of sales tax by internet-based retailers. And in its decision, the court stated that individual states can require online sellers to collect state sales tax on their sales. It overturned a rule from 1992. The Quill versus North Dakota case prohibited states from requiring a business to collect sales tax unless it has a physical presence in that state. And for years, all states have argued they were losing a lot of money and not being able to collect tax on internet sales to customers located in their states. Previously, the burden was on the customer rather than the seller to pay the relevant tax. And in that case, the tax generally is called use tax rather than sales tax, and companies and customers simply didn't pay the use tax for that state. So if you're selling, internet states around the country, you'll now have to be aware of what states have passed laws, what the thresholds are for individual states, because they're going to vary state by state. And a couple of things you can see on here, for the most part, a lot of states are looking at either $100,000 in gross revenue or 200 or more individual transactions. So what I'd like to phrase it to most folks that we've talked to in the past 2 months when everything changed is, now you really have to keep an eye on all of your sales. So you may just be in Georgia and all of your inventory is in Georgia, but you ship all over the country, and shipping via common carrier is not a nexus building activity. But if you did 180 transactions, you sold to someone out in Nevada that had a big need for your product, that may be a state where you have to get registered moving forward due to economic nexus. So a lot of things are changing. It's making it very, very challenging for small business. And really, you just have to keep an eye on what states you're doing business and run a report every month or every quarter. And when you get to close to $100,000 and or 200 transactions and you're, in that calendar year, excuse me, it may be smart or be advantageous to start to think about getting registered. The big thing I like to phrase it, and I've said it to a lot of folks, is everybody has always been reactive when it comes to sales tax compliance. This ruling and the way everything is changing across the country is really propelling everyone to now be proactive when it comes to sales and use tax requirements and reporting, as opposed to being reactive. So if I'm an internet seller, and I'm not a CPA or a tax attorney, I can't tell anybody what to do, but what I'm seeing is a lot of folks are going, okay, I know I'm going to be close to this in the next 2 years. I'm going to go ahead and get registered and start filing a tax return. So we'll talk a little bit about what that means, and I'll highlight those individual states here shortly. Avalera on our side, we can help. We have a tax advisory services team. They're made up of former CPAs, tax attorneys. They can help with any past liabilities, registrations, determining if in fact have nexus. We do a $4,500 all-state nexus study where we'll ask you a bunch of questions about your particular business in the previous 12 months, and then give you a determination based on our recommendation as far as where you have nexus or where you have to get registered to collect and remit tax. We can also do ongoing monitoring, like I mentioned, help you get registered, and then keep an eye on what's changing in the laws. And at some point, we're going to have a tool available that's going to be kind of like a usage meter, I believe, where you can see kind of where you're at, or you can also run reports just month by month as far as where you're currently selling. So economic nexus is a very, very hot topic. It's very important. We'll talk about Amazon and marketplace sellers as well, and then we'll talk about how this can all be completely automated within your QuickBooks platforms.
Matt, can I jump in? We just had a question come in.
Yep.
Viewers is asking, are online sellers based on Indian reservations exempt from these tax obligations?
Sometimes they are. Typically, it is a state-by-state exemption, and a lot of times I believe if you check out on the Department of Revenue website for that particular state, they will denote if that is one of the ones that they are exempt, and they may not have to worry about that. Now, it may be relevant for that particular state. However, if the reservation was in Colorado, but then they did 100 transactions a month or whatever in North Dakota, they still may have to get registered in North Dakota. I think it's going to be North Dakota is not going to care where they're located or really be hinting on what's going on in their home state. Outside of that state, I think it may be. I don't believe it will be relevant. If they're exempt in a different state. So I don't know if that answers the question, but happy to look into it in more depth. I'd look on the Department of Revenue website for that state and see if they have any particular exemptions.
Great,
Good question,
thank you.
Great question. I am not going to read this next slide. However, we will send this out to you when we get off the call here today, and I will also put the link to our homepage that walks through kind of Avalara stance and shows the thresholds for those individual states. But we'll send this out. Just frequently asked questions. What's really important? What does economic nexus mean? What is the case all about, et cetera? So we will send this, and I'm going to walk through just here briefly, just aside from economic nexus in this particular ruling, what it really means from a sales tax nexus perspective and where you may have to get registered aside from economic nexus at this point. So the elements I like to call of your tax risk profile, number one is nexus. Where should you be collecting tax? Number two, how are you handling the calculations and reportings? Number three, is the product and service even taxable, right? If something's not taxable, that doesn't mean you don't have to remit tax or file a tax return. Some states will require you to file $0 tax returns, even if what you're selling in that state is not taxable. So that's one thing that's worth a conversation and is very, very important. Keeping up to date with jurisdictional rate assignments, managing exemption certificates, so having those pieces of paper on file, making sure they're valid, up to date, et cetera. And then once you've done all of that right, filing a tax return, handling the remittance, sending it in properly. So this is really your risk profile of what's important. This is not me for the record, just to throw that out there. So the nexus building activities, what I like to tell most folks are think about your business today, whether you're a CPA, a bookkeeper, or you're a salesperson and you're on this webinar just to learn more about technology, but think about it like this. Look at the state that you're located in where you have a home base or a presence. And then ask yourself or think about your company and go, do we have anything listed on the screen here that is outside of our home state? So do we have affiliates? Do we go to trade shows? Do we go repair property outside of whatever state you're located in? I'm in North Carolina, so I'll use it as an example. So do I have multi-state locations? Do I have an office in South Carolina and Florida? If so, great. I need to collect tax in those states. Do I have inventory in Ohio, Massachusetts, and Pennsylvania? If so, great. Those are nexus building activities, and those are reasons why I would have to collect tax and file a tax return outside of the state of North Carolina. So nexus is an industry term that states you have established some sort of physical presence or a tie to a taxing authority, a state, outside of where you are located. So these are different from state to state, county to county, city to city. They're all different. They vary from state. Economic nexus is now throwing a whole new avenue in here where some of these may not be relevant. For the most part, when you have boots on the ground, inventory, traveling sales reps, or you're touching another state, you need to get registered in those states to be compliant. And again, any questions about Nexus, just type them in the question box. We can circle back around to them at the end. There's typically a lot of questions. I also we'll defer to some of these to the Department of Revenue website where you can take a look there, and they may say, hey, drop shipping is not a nexus building activity in Virginia, but it may be in the 3 other states, so it's one thing to keep in mind. So nexus is very important. So why is sales tax management so hard? You have content changes, you have to keep up with your transactions, your records, the rate and jurisdictional changes. Those are happening all the time. In your business process, do you have multiple systems you're using? Are you using a website for e-commerce sales? And then you also have a homegrown platform that you do your invoicing out of. Those have to match up. You have deadlines and filings that are always going to be due. You then also have to handle the payments and remittance, and then also collecting the tax, right? Sales tax is a pass-through expense. It makes your company no money, but it is something that is going to have to be done right to ensure compliance. And then you have real-time requirements. So do you have a website? Do you have an obligation to collect tax in a bunch of states? Real-time requirements at the time of checkout are very, very important because that's your business, and you don't want to lose people due to cost and errors and not calculating the right amount of tax. So understanding sourcing rules or CITES. So for the most part, sales tax is derived based on the ship to address, where the ends or the end goods or when the ownership is changing place. So for the most part, almost all states are destination-based for calculating sales tax. We have quite a few. If you look on the far left, they're origin-based for products and destination-based for services. The native tax functionality in a shopping cart or in QuickBooks Online or QuickBooks Desktop is not going to take this into account. You have states like California and Texas. Counties are origin-based. Cities and special taxing jurisdictions are destination-based. And anytime you're going on site or you're driving somewhere to perform a service, an installation or delivery or something along those lines, those are always going to be destination-based. So these are the more reasons to look at a technology solution, try and think outside of the box, no pun intended, and see if there is something out there. Now, if you're just in one state, like Massachusetts, and you're selling calculators, you may not need a software. You may not need to work with a third party to help you automate tax compliance. That's a very easy state. It's a flat rate of 6 1/4, and what you're selling is fully taxable. So think fully taxable, meaning anything you can physically touch is taxable. Paper, pens, calculators, cups, those are fully taxable items. So that's when I refer to TPP or tangible personal property, it's always taxable. This is one of my favorite 2 slides here. So I kind of get a little excited. I'll take a deep breath here. So for the most part, most shopping carts and or accounting packages are going to be doing some form of a tax calculation based on a zip code. One of my sales guys says this every day. Zip codes are for the mailman to deliver mail. They're not for calculating sales tax. Taxing jurisdictions aren't always going to follow a zip code. Zip codes can vary and tax rates can vary and percentages can be completely different in one zip code. And my next slide will illustrate this to a T. Zip codes are not going to help determine in your platform if what you're selling is in fact taxable. So they're not going to handle taxability. They're going to give you a false sense of security and think you're doing it right just by using a blunt instrument to determine sales tax. Avalara has actually like 6 states that pays us to maintain their rates and boundaries on an ongoing basis. States pay us to maintain their rates and boundaries. It's kind of funny. I love talking about it. So here's a good example of zip codes versus rooftop. So when a technology solution, like someone like Avalara, you're utilizing us, we're actually going to give rooftop level calculations. So this is a residential neighborhood in Commerce City, Colorado. This is the same zip code, the same street. Literally, this guy lives on one side of the house to the next. All the houses in blue have a tax rate, a composite tax rate of 9.25%. All the houses in green have a tax rate of 4.75%. This is a 5% delta from one side of the street or one house over. I don't know what this guy did, but he made a heck of a deal when he bought his house. So this is why we say rooftop level calculations are very important and zip codes are not the right tool for the job. If you're collecting tax or you live in Colorado, Alabama, Louisiana, California, or Texas, zip codes are not going to be the right tool for the job. They're not going to help make sure you're compliant. These states are very tricky. They're very challenging. Colorado, for example, at the city level, if you sell software as a service, it's exempt, but at the state level, it's taxable. How would you ever know that automatically or within your platform? So it is very, very challenging. And it makes sense to at least think about talking to a technology solution or a preferred partner about what they can offer and how they can help you automate tax compliance. So zip codes are not accurate, not the right tool for the job.
Hey, Matt.
Go ahead.
We have some questions that are coming in. If we could take a quick pause.
Sure.
So I have one attendee. He's asking, can you explain origin-based?
Sure. Yep. Great question. So there are certain states where, depending on where you're actually located, you may be charging tax on the origin if it's in one of those funky states. Like, for example, one of the states that was listed up there was like Tennessee. So Tennessee is an origin-based state. So no matter what you're selling in Tennessee, if you live there and you're completing a sale, you're going to charge tax based on where you're located, so your office. So it's a lot easier, right? You don't have to worry about the ship to address. There are a handful of other states that have origin-based for either a product and destination-based for the services, but it's not natively going to help or not natively going to do that tax calculation in QuickBooks on its own. So there are certain states where no matter where you're shipping to, you may just be charging tax based on the origin of the actual invoice. And can take it offline and dive a little deeper if need be.
Great, thank you. The next question is, if we have a board member residing in a state, does that create nexus since he participates in many planning meetings and phone calls?
So good question, and great question. I'm going to revert back to one of my initial statements is I'm not a CPA or a tax attorney, but think of boots on the ground, people, inventory, traveling sales reps as nexus building activities. If that guy works from home and he is an employee of that particular company or a board member, that's probably a nexus building activity. Now, it leads me to a couple other things where, you know, if he's been there for 10 years and the company's been there for 10 years, that may mean that that particular company should have been charging tax or been registered when you first established nexus. So that could be problematic. It's worth a longer conversation with the company and maybe controller CFO, but that is typically a nexus building activity, and I'm doing my best to walk a fine line on how to answer it. So, but good question.
Thanks. And then one more. If I buy from a vendor in an economic nexus state, South Dakota, who requires me sales tax ID in my state, North Carolina, do both states get sales tax for the same product sale?
So it depends on how the relationship is with that particular person. So a lot of times the scenario I'll throw out there, and hopefully we'll clarify it, is if you're buying from somebody in a different state, and then if you're buying products and then you're either selling it on your own where you're going to charge tax, like for example, if you needed to get registered in California because you have a presence, but then you're buying something from someone else in California and then you're selling it to your end user, you would want to present that particular person or vendor with a piece of paper that says, hey, I'm not the end user, don't charge me tax, I'm then charging tax on the end customer. So it gets a little funky when you talk about two states, but it really depends on the relationship, how you're selling it to them. If it has anything to do with resale, you may need to get registered in that state, so the tax is only not going to be charged to you, but you're just going to be charging tax to the end user who is who is going to be who you are selling to. I'm not sure if that answered the question, but again, a couple of these, if we need to dive deeper offline, we can definitely dive into it. So it's a tricky and not a real quick answer.
Great, thank you. And then one more, and then I'll let you move on.
Sure.
If we're required to be registered, is it necessary to have a registered agent in that state? It could get costly.
Good question. So typically, that falls along the line of when you have to get a business license. Some states are only going to require you to do that if you have a physical presence. If you just had inventory, if you just had a traveling sales rep or a contractor, they may not require you to do that. If you actually have an office, then sometimes you may have to have an actual registered agent. Avalara is going to be coming out with a partnership where we're going to be working with some folks that are going to be handling business licenses, and we're going to do like some sort of bundle where we can complement that in there. But typically that's only required when you have a physical location. But great question.
Great, thank you.
Yep. So let's talk about marketplace sellers, right? This is where a lot of folks are heading, and they're saying, hey, look, I can get my products to people fastest. I'm going to put Amazon and have them fulfill my orders. So Amazon is this huge company, and they're kind of sweeping, everybody along with them. If you are enrolled in the Fulfillment by Amazon program, so FBA, you potentially have to get registered in up to 26 states, meaning there are 30 states that Amazon has warehouses or a physical presence. 26 of those 30 states deem that third-party inventory is nexus building. So just simply by enrolling in the Amazon FBA program, they can put your products anywhere. If they know predominantly all of your customers are buying in the Northeast, you sell a coat or something like that is over there, you can pretty much guarantee your products are going to be in those warehouses. When you initially start to work and sell with Amazon, I've heard California, Texas, Illinois, and Pennsylvania are the first 4 states where your product is typically going to be shuffled around in just for sorting purposes. Now, you'll see a dot for North Carolina. I live in North Carolina. Amazon has a location in North Carolina, but it's only a sorting center. It's not a fulfillment warehouse. So if you were doing the FBA, that would not be a state that you would typically have to get registered in. So it is challenging. Think inventory, think where you have locations, and Amazon fulfilling your products. That is a reason to get registered and collect and remit tax in up to 26 states. I'm sure there'll be some questions on this. I have another slide deck that I can send over to Jennifer, and we can get that out to you as well. It'll dive a little deeper on Amazon. But what it means is now's the time to pay a little more attention, should you be an Amazon seller, to potentially get registered in those states. And then as you do get registered, if you did get registered in 26 states, anytime you then have an invoice in QuickBooks or your personal site, you want to charge tax in those states as well. So this is where I usually do a little bit of pause. We're kind of ahead of the time, so we're running a little behind. So I'm going to go a little quicker than I normally do. So this is where I say, thank you for using Avalara. And everybody's kind of like, what are you talking about? So think about everything you did in the past week. Did you fill your car with gas? Did you dial your cell phone on the way to work? Did you buy a coffee? If you're in New York, did you purchase a bagel? If they slice it, it becomes a service, and then it becomes taxable. If you order a bagel whole in New York, it typically is not taxable because there's no service involved. I think it's the state of Texas. If you order 6 or more donuts or bagels, it's taxable, and then under 6 is not. So what I'm getting at is there's a lot of areas that Avalara has focused. So we handle sales and use tax. We handle excise tax. We handle telecommunication taxes. Avalara is going to calculate more than 6.5–7 billion transactions this year. So potentially, if you're online buying something from a customer and there's sales tax being calculated, odds are Avalara is probably the one calculating it. We've been in business over 14 years. We have about 20,000 paying customers. And I'll get into our integrations and really our technology and what the technology offerings mean for the individual sales and for the individual companies. So we're a cloud-based system. We're not an on-site. We're not going to come out to your office. It's simply a download, as you can see the little man on the screen here, plugging it in. The first thing you have to do is tell us what particular platform you're using for us to plug into. It's just a download. It's not a major installation. Now, if you're using NetSuite or Oracle, yeah, that may justify the words of implementation. Just speaking to QuickBooks, very simple. You can download the connector in 15–20 minutes. Then on the back end, you just have to tell us what states you collect tax in, what your product lines are, and what you're selling, and then we will handle the tax determinations in real time on the back end. And I'll walk through what that looks like. So I have a screenshot of an invoice in QuickBooks, and we'll run through a live invoice and demo here shortly. So when you go to save those invoices or estimates or sales orders or whatnot, as long as it's in a state that you've told us you have an obligation, when you save it, it's going to reach out to our tax engine, which is represented by the A in the cloud, and we're going to, in real time, properly assign the rates, properly assign the rules, and make a tax calculation determination in under 0.2 of a second, and put it back as another line item in QuickBooks in under 0.2 of a second. So it's business as usual. Once we have calculated the tax and determined product taxability, we can then offer the full compliance solution, where we will then handle the filing and the remittance, and it can be about a 90% hands-off approach. Most of the legwork is done in the very beginning, just setting it up, downloading the connector, telling us what states, pretty simple. And then if you do want the full hands-off solution, we can then file and remit. You just have to sign power of attorney, banking information, and we'll cover that here shortly. You'll see here, Avatax does not support cash basis accounting. Avatax is our core product, or a hub, if you will, where we have the three main offerings, which I'll walk through again here shortly. But if you're a cash basis accounting, meaning you have a $7,000 invoice that you do in July, but you're a monthly filer and you're not going to remit that tax the following month, that prohibits us from offering our end-to-end solution, meaning we require companies to be on an accrual basis for tax reporting. So what goes into an Avalara tax decision? First thing we're going to do is we're going to validate the address. We actually convert it to lat long. We're going to look at and I just went through a couple of these, but we're going to look at your Nexus profile, or where you told us you have an obligation to collect tax, where you're registered. We then take into account any thresholds, any tax holidays, any rules. We'll look at product taxability. Are those items even taxable? I'll show you what I mean when we talk about tax codes. And then also exemption certificates. Is the customer exempt? If we plug into QuickBooks and we're calculating tax, if you mark that customer exempt in the customer record or card, we're not going to calculate tax. It's up to you just to make sure you have that exemption certificate on file, should you need to prove why you didn't charge that customer tax. So I mentioned early scalability, and again, this is Technology Tuesday. So Avalara has over 600, and we have a ticker, I think it's in some of our emails. I think it's over 632 now, which is really cool. This is really what separates Avalara, in my opinion, from the competition. And the competition isn't other providers. Competition is really folks that are doing sales tax manually. And if I told you 5 years from now, not a single person is going to be handling sales tax manually, I think a lot of people would probably disagree, but it's definitely trending in that direction. We have connections into CRMs, e-commerce platforms, point of sales, and then major ERPs. You may be on QuickBooks now, but you're going to be a $20 million company in 3 years and you're going to buy NetSuite. Great. We have a connection to that. You can never outgrow Avalara. We have plugins and already built, certified, pre-built integrations where you just have to download, like 3D Cart and WooCommerce. I mean, you can be up and running in minutes. It doesn't take a whole lot of time. And these are all the partners that we have worked with over the years to say, hey, we want to be able to have a white glove service that is already built and pre-built for Acumatica or Sage or Oracle to offer your clients a tax compliance solution. Another little snippet just of our integrations and all the other platforms that we plug into. So what does it look like to implement it? Everybody's going, okay, it seems easy, it sounds fun. So to activate your account can be real simple, anywhere from 5 to 10 minutes. To configure your profile, if you only collect tax in Georgia and that's the only state you want to worry about, it doesn't take a whole lot of time. If you're in 37 states and you're registered everywhere and you're filing tons of returns, that could take anywhere up to an hour. To install and configure the actual connector, I mentioned QuickBooks can be done in just a few minutes. NetSuite and Oracle, sometimes those take anywhere from 30 to 60 days, depending on what kind of customizations have been done. Or if you had an open source platform like OpenCart or Drupal, where there are customizations, it may take a little bit longer. So to remit tax, it's as simple as telling us what form you file, how often, and I'll show this here in a minute so everybody can see what it looks like. Telling us what form you file, how often you file it, signing a power of attorney, put banking information in. When Avalara handles the remittance, we're actually going to pull the sales tax, pull the dollar amounts from you. If you owe the state of California $888, we're going to pull that from an account that you designate, and then we're going to file the return, and we handle the remittance on you. So it's a complete hands-off approach. And as an outsource, just like you would outsource payroll with a company like Paylocity or Paychex or ADP. Very similar concept. So 5 steps to reduce risk. We're almost done with PowerPoints, I promise. So my goal is under the first 30 minutes, so we're good. I want to make sure we get some Q&A towards the end. So evaluate where you have obligations to collect and remit tax or Nexus. Ensure that what you're using, the systems are properly calculating tax, or they have the information have the high importance and understand what information you need. Always evaluate costs and risks for what you're doing when it comes to sales and use tax. Like I mentioned, if you're just in Massachusetts and you never leave there and almost all your business is there, you may not need a software to help you do that. But again, just know that there are out there, and you're working with out of the box and Avalara, we can definitely help evaluate the technology solutions. Think about what would be great to have and what would be something we have to have. Like my mother files a tax return for our company and she shows up 1 day a week. We have to have somebody else file the tax returns. Great, Avalara's here. We know how to file the tax returns. We don't need help with that, but we need help with calculating tax and determining product taxability. Great, we can offer our determination engine and just help you calculate tax. Avalara and Out of the Box wants to make sure we know we can help you as much or as little as you want on an ongoing basis. And then make sure to have buy-in from people that are involved in the process. All right, so we call ourselves the A-Team, powered by the A-Team. So Avalara, I'm based in Durham, North Carolina. Obviously, we've been partnered with Out of the Box, and we plug into QuickBooks Desktop, QuickBooks Online, and basically any other version that is out there. The only thing we don't party well with is the Canadian version of QuickBooks. So if you're on the Canadian version, or if you're looking in Canada, we may have some challenges offering in the end-to-end solution. But again, we can definitely help you as much or as little as you need. So that's the end for my slides. Now we're going to walk through a demonstration. I appreciate everyone's patience. So a couple things. This is just a QuickBooks Manufacturing and Wholesale 2018. And I'm just going to walk you through what it looks like after you plug in Avalara. And I mentioned it's just a plug-in, it's a download. The word software typically kind of makes QuickBooks users a little hesitant. But all we're doing is overriding the native tax functionality in QuickBooks, which is typically based on a zip code, and giving our full automation service. So when I click on the file dropdown, you'll see Avatax listed. That's just going to let you know we're actually completely integrated. We're a gold certified developer with Intuit for sales tax. And it's just a download, it's just a plug-in, doesn't take a whole lot of time. When I go ahead and put in Avatax demo, this is going to pre-populate some addresses. So we have a bill to in King Street in Seattle, where our office is located. We then have a ship to address in Half Moon Bay, California. And what I mentioned earlier was as long as you have told us, and I'll show you here shortly, if the ship to address is in a state that you've told Avalara you're registered, you have a tax ID, and you want us to calculate and collect tax, the tax item or the tax code moving forward is just going to be Avatax. That's the trigger for your QuickBooks Desktop or QuickBooks Online to ping our service. So I'll put a couple line items in. We'll put something like a fully tangible item, a big computer, and then let's put some items that have varying taxability. So we'll do software, and let's just say you're a software company selling hardware and software, and then we'll put a software maintenance contract. These have varying taxability. So when you put those line items in, and then you go to save the invoice or sales order or estimate or whatnot, you can tell Avalara when and how often you want us to calculate tax, if it's, for example, just on sales estimates or orders or whatnot. So when I save it, it's reaching out, and I mentioned earlier, it's properly assigning the rates, properly assigning the rules, calling our tax engine based on that ship to address, and we're determining if those three line items are in fact taxable, and then we're giving a rooftop level calculation based on the ship to address, and we'll walk through that composite rate and what that means. You'll see total tax, and then reporting another line item, total sales tax calculated by Avatax. This can be edited if you just wanted to say sales tax, but the tax item, schedule, tax code down the bottom is going to be Avatax anytime you're in a state that you have told us you're registered and you want us to calculate tax. There's a limitation within QuickBooks and our platform and our connector to where it's going to say 0.0, but it's going to have total Avatax as a line item. I'm sure there'll be some questions on this. I'll get them to the end. Let me just walk through the console so I can make sure we have enough time. I want to leave at least about 15 minutes for Q&A. So I ran this invoice on 7/30, which is yesterday. I'm going to jump into Avatax. And again, Avatax is our core product. We have the calculation engine to determine the tax. We then have the full compliance suite where we can handle the filing and the remittance. And then we have a third core product offering that is called Cert Capture, where we can help store, maintain, validate, and manage the life cycle of your exemption certificates on an ongoing basis. Bear with me here. I'm just going to pull up that same invoice so you can see how granular our tax calculation engine is. And when you get into states like California, Louisiana, Alabama, Colorado, it can be very, very challenging. So we're going to pull up that same invoice, and we have the bill to in Washington. We're shipping to Half Moon Bay. Here's our three line items. Before I expand this, you'll see a breakdown of the tax summary. So the amount, what's non-taxable, what's taxable, the tax, total number on the invoice. You can see a full breakdown here for those individual line items. And then when I expand this, here's how you're going to see how granular the solution gets or the calculation gets. So we have a San Mateo County tax, a California state tax, a special district tax, and a local tax of San Mateo County that are all applicable based on this ship to address. So we take the composite rate It happens to be 8.75%, and apply it to each line item to calculate tax. And I know one of the questions that's probably going through people's heads is, well, how do you know that software is not taxable in California? How do you know that a maintenance contract is 50% taxable, 50% non? We have all of these Avalara system tax codes that you map your products to, so we know what product or service you're selling. So I'll take this tax code and I'll go to our open URL. And this is customer facing, public facing, so we'll send this out. This is where you're going to tell us what best describes the product or service that you're selling. So you sell cloud services, a software as a service license agreement. You would pick this tax code. You want to pick what best describes the product or service that you're selling. If you're doing clothing and you're in the Northeast, clothing in the Northeast has a threshold of over $110 is taxable, under $110 is non-taxable. This is where you would want to pick a tax code that best describes the clothing and apparel that you're selling. So once you map your SKUs or your item master in QuickBooks or whatever platform you're using to our Avalara system tax codes, we're on the hook to then make that determination. So we know in Georgia, this is exempt. In Florida, this is taxable. Anytime this is over $110 in New York, it is taxable. That's really just a quick view of what our tax codes look like, so we know what product or service you're selling. Then it's on Avalara to maintain that content. Now, if you tell us you sell software, but you pick a tax code that's for aprons, that's going to be on your end. We are the first company to offer the cloud solution for sales tax compliance, as well as a 100% guarantee for the accuracy on the tax determinations. And again, that's assuming you set up your company profile right, and when you sell bandanas, you pick a tax code for bandanas. So that's the calculation piece. I'm going to show you a couple other things here. We're at 1241. And once you do that, we can actually handle the filing and the remittance of the tax returns, where you just have to log in once a month or once a quarter, tell Avalara what forms you file, click approve, and then Avalara will actually handle the filing and the remittance for those particular states. And this is my dummy data, so it's not pulling it all up, but if I click on Alabama, this is where we're going to prompt you to pick a form, tell us how often you file it. We'll even suggest the 3 or 4 that are available. Schedule the return, sign a power of attorney, and then Avalara can actually handle the filing and the remittance. It's our white glove service. We answer tax notices. We guarantee to fill the forms out time and send them in, fill them out on time, answer any tax notices, and provide a full record back. A lot of states will give you discounts should you actually just even file those returns on time. We have a full reporting tab, where if you want to reconcile or run reports for tax return filings, you can create a report, pull a previous month's worth of data, and you can even utilize this to pull a report to then see all the information you're going to need to then go file the tax return for the state of California. I mean, you have everything right here. And we have hyperlinks that will show you the individual transactions at the state, county, or special taxing jurisdiction level. We'll have all of the information over here for the tax, the rate, was it taxable, was it exempt, et cetera, et cetera. You have all this just by utilizing Avalara and purchasing our plugin to calculate sales tax. I mentioned earlier, it's as simple as telling us where you collect tax. So you add a new state or you hit a new threshold for economic nexus and you want to add another state, it's as simple as checking a box. And you can say, I now want you to collect tax in Arizona or Kentucky or Kansas. You turn that on, you pick the start date, and if you know you're not going to hit that threshold, but you just got registered and, for 20 days out, you can actually put a start date for that particular state to know when to start collecting sales tax. So it's as simple as just telling us what states, how often you file, if you have any company locations, telling us what you sell, are there any thresholds, are the customers exempt. These are very, very important things that just have to be done on the front end to essentially show customers why they're exempt and help them automate that compliance perspective. So we're at 44 after. I did want to hint on the South Dakota Wayfair page. I will put this in, we'll email this over to you so you can have it after. I want to make sure we open it up for plenty of questions, Q&A. But this did just change. It is very important for remote sellers what you need to know. We'll send this over. Going down here, just a little quick snippet, and we had this in the slide deck. What I really want to show is all of the states as of July 23rd and what they're saying and what potential dates. And again, this is not advice. This is just what we have heard and what they're looking at. So you can see effective dates for some of these, and some of them, like Hawaii, was 7/1. So if you start doing over $100,000 of sales in Hawaii, you may need to get registered or take a proactive approach. A lot of the states have it coming up in the next coming months, or even Iowa, January of 2019. So the best practice would be to start looking at all of your sales, looking at your dollar amounts in all of the states you collect tax in, or all of the states you sell to. If you've never gotten registered in Wisconsin and you never collect tax, but you see that you're starting to creep up to where you've done 150 transactions, it may make sense to take a proactive approach and potentially get registered there starting in 2019. So think about that. Keep an eye on where you're selling, how many transactions, what your dollar amounts are, your revenues in those individual states. Seek out to a tax attorney or a CPA. Again, Matt Hammond at Avalara cannot tell you exactly what to do, but now is the time to leverage technology, leverage third-party providers, talk about outsourcing the daunting task of sales and use tax, or reach out to your partner network and see what makes sense for your particular business. So we're at 46 minutes. I'm going to just kind of keep this page up, and Jennifer, I will wait and just open it up to any questions, and if anybody wants me to cover anything again, we'll leave it here for about 14 minutes, okay?
Great, thank you so much. Yeah, we do have a lot of questions that have come in, so we'll just jump right into them. The first one is, I have a client who sells equipment through a non-employee representative. Would my client be required to collect sales tax for sales by this non-employee representative?
So if it's through a non-employee, it really depends. I mean, that may just be a sale that's if it's outside of their home state, if you're just selling it to that particular non-employee, that may not justify nexus. A lot of times that can trigger, or it will lean folks to think about drop shipping, where depending on where the employee is, where the actual inventory is. That question, I may have to get some more information to give a true answer. But again, we can circle back around on any of these, and we may have to kind of have a conversation outside of the webinar. So it really depends on where that person is, where the actual inventory or what's being sold, and then what they're doing with it, to determine whether or not that means they have to charge tax or whatnot.
Great, thank you. The next question is, a high-end product is sold from a storefront in California to a visitor from another state. Is sales tax due to any state by the vendor?
The vendor, probably not, but that person who is actually purchasing it, if they're buying it, if they're purchasing something and bringing it into their state outside of where they purchase it, they may be subject to use tax. They may have to report, and the example I always used to use, I used to work at Lenovo, is if I bought a bunch of computers in Virginia for my business and then brought them into North Carolina, I would have to self-assess use tax and remit use tax for that particular product in the state that I live in. So that may be more of a use tax type scenario, depending on where the product is being taken back to or being used.
Thank you. The next question is it possible that a company could be liable for origin-based sales tax in one state, destination-based tax in another?
100%. Yep. It really depends on where they are located, where they have obligations. I mean, if you're just in Florida and you never have to get registered, you never leave the state of Florida, you don't have inventory, you ship all your products via common carrier, a lot of those rules you're not going to be subject to unless you've established nexus. So when I mentioned that California and Texas are origin-based for products and special taxing jurisdictions, as well as for services, if you never go to those states and you don't meet any of these thresholds, then it's not of your concern. I mean, everything is derived from, okay, do we have to accept these laws and rates and rules and everything that's changing if we have established nexus in that state? So if you never go there, then no, origin is not relevant at all unless you have a reason to get registered to collect remit tax there. Then you have to evaluate those types of rules. But great question.
Thank you. Next question is, what is the rule of thumb for deciding if the company wants to process the sales tax payments versus having a company like Avalara take care of it?
Did you say what is the process? I'm sorry.
Like, what's the rule of thumb in deciding if the company wants to do it or if they want to have Avalara?
Oh. Yeah, I mean, our services or our technology, and we're a technology company that focuses on sales tax. The technology that we utilize is that we can plug into pretty much every platform out there, other than marketplaces, because they already calculate tax and they're closed. Avalara can calculate the tax. When it comes to filing in the remittance, you can utilize just us to calculate the tax, and then you can remit the tax to the states and jurisdictions on your behalf, or you can utilize us to do it. So it's either or. I wouldn't say there's any implications. I mean, when you sign a power of attorney, we're going to pull the funds from an account that you designate when it comes to our managed return services, and we're remitting them with all of your company information. It's just coming from Avalara. So I don't know if that's answering the question, but yeah, I'm not sure if I answered that question.
Okay, no problem. Next question is, most of our sales are through e-commerce. However, we have other sales that are entered manually. Would we have to file a separate return to account for those sales outside of e-commerce?
No, all of your sales in the states that you collect tax in, regardless of the avenue, whether it's you do 100 phone orders a month in QuickBooks, but then you do 7,000 orders a month on your e-commerce site, all of that tax, all of those orders, all of the tax implications, the exempt revenue, all of that is just on one return. So when you go to report your sales in Florida, you're going to want to know all of the sales you did over the phone, all of the sales you did on your e-commerce sites. Some states are even trickier. Sometimes California wants to know what all of your sales were across the, other states or the whole country. They have some sort of, I don't know, concession they offer depending on what you're selling. But no, all of that needs to be compiled to one tax return, one reporting method, because that's all of your sales in that particular state. So it would all go on one return. Good question.
Thanks, Matt. The next question is, we manufacture mounting structure for solar panels, not roof mounted. Some states exempt solar related. Is there a safe course to research the taxability of this?
Sure. So we have taxability on installation, delivery, maintenance ongoing. We don't have a lot of content in the actual energy, but for example, in a state, if installation of tangible personal property, and I'll pull up a tax code here real quick. So let me just type in installation. So we have, I didn't spell it right. So installation, bear with me here, installation. Of course, with everybody watching, it's not worrying. I'll pull this up. But anyway, installation is something that is where we'll have the tax content behind it. So it really just depends on how you're breaking out on the invoice. Do you have a line item for the solar panels? Do you have a line item for delivery, for installation, for ongoing maintenance? Avalara can make those tax determinations just based on the service itself that is being performed. So you wouldn't have to worry about that when it gets into the actual solar energy, and or if there is some sort of tax, that's going to be a state-by-state basis, but we can handle the complex taxability rules for the installation, the delivery, the maintenance, yeah. So it does depend by state.
Thank you. Our next question is, when using Avalara and it doesn't download the tax correctly due to an internet glitch, what is your process to correct the invoice? Do you have to delete the invoice and redo it?
I think that might be referring to like our uptime, which our uptick is in the 99.999. I think it's 4 or 5 nines now. If for some reason it couldn't return it, it just would. It would not. I believe we default to a standard rate of 10%, something along those lines, just so you're still going to calculate some form of tax. We may have some mechanism that kind of stalls the checkout or halts people from purchasing, but I believe, like I know in big commerce, we have a fallback rate. If for some reason it can't calculate tax of 10%, it's typically a case by case and a connector by connector or platform by platform determination on what the actual fallback is. But again, we have an uptick in the 4 nines.
Awesome. A couple more questions. If you find that you've been in non-compliance for many years, will there be reduced penalties if you self-disclose?
Great question. So there are two offerings and two ways to go about compliance. We typically use a pivot point of $5,000. So do you think you owe more than $5,000 in tax or less than $5,000 in tax? So if 4 years have gone by and in the state of Tennessee you did $60,000 of sales, and at a 3% tax rate, you may only owe, $6,800 or let's just call it $3,500. A lot of times we typically would just do a historical registration where we're going to reach out and say, hey, we want to get registered. We're going to file, 10 returns in the past to get compliant and then collect and remit tax moving forward. If you have done $1 million a year in California for 10 years and you've never been registered or never collected, but you had all kinds of reasons to collect and remit tax, we typically look at a voluntary disclosure agreement, which Avalara's professional services team can engage you in, where we go to the states anonymously, and the goal is to limit the look-back period from 10 to 7 to 3 to 4 years, and potentially talk to them about the penalties and interest and see if they're willing to negotiate those. We took a customer last month that he owed the state of California $376,000 in taxes over the course of 10 years, and I think they estimated that was going to happen through the VDA was he was only going to owe about like 127. So that's kind of the purpose of utilizing a voluntary disclosure agreement through our professional services team is to hopefully limit that look back period and see if we can, reduce that cost. So $3,500 a state for a VDA where we go to the state anonymously. It's a more formal approach. You have to apply to be in the program. They can take anywhere from 3 to 5 months to happen. Once you do enroll in that program, you can start to collect and remit tax moving forward. If you know it's a very small amount, like I had a guy last year or two months ago, he said, look, I've only done like 4 or 5 sales over the course of 3 years that equate to $1,000. I would just probably tell that guy to get registered and collect tax moving forward, because all they're really going to look back. I mean, one of the things that's really important, I'll go real quick, I know there's more questions, is when you first get registered in a state, if you went on the DOR website, one of the very first questions they're going to ask you is, when did you start conducting business in this state? You want to be accurate and you don't want to lie on that question, because that can be a big, big problem. I think we have a couple more minutes. I'll stop there. Go ahead.
Yep, no problem. Yeah, there's just a few more questions here. For consulting and IT services in different states, are they taxable when consultants are using computers and software?
There's only a couple states that tax consulting services. I believe most of them are on the East Coast. Last time I checked, I think there was only 2 to 3, but that could have changed in the past, 6 months. So that'd be something where you'd want to look on the Department of Revenue and see if they say anything about consulting services. As far as having a computer or a software involved, I don't have a good answer for that. It may be irrelevant, because it's going to depend on where they're actually doing the consulting and if they're going on site for those particular types of consulting, or where that person is located.
Okay, great.
So kind of a tough question to answer on a short time frame.
Yeah, for sure. Just 2 more questions. Do you partner with Zoho?
Which one?
Do you partner with Zoho?
Yep, we have a direct integration to Zoho. It's actually one of the easiest integrations we have as far as turning on. It's almost like a flip of a switch. We're kind of embedded, but you have to purchase the software in order to turn it on. So same thing as WooCommerce, 3D Cart, XCart, QuickBooks Desktop, QuickBooks Online. Yes, we do have an integration.
Awesome. And then the last question is, when an invoice is voided, does Avalara reduce the tax liability?
Yep. So we look at credit memos and returns and refunds just like we would a normal transaction. If we've already remitted the tax, we're then going to issue a credit towards the following month. Very standard, very common. Our software can handle it. Then they'll walk through that during the go live process when you're actually installing it, as far as how to handle it.
Awesome. So that's all the questions. If you had a couple more things you wanted to mention before we wrap up, I'll leave you to it.
Awesome. So I appreciate it, everyone. Thank you so much for your time. I wanted this to really just, awareness of what we have out there, how Avalara can help. And I mentioned we've partnered with Out of the Box for years now, and they're great over there. I love working with them. Reach out to us if you have questions. We can help as much or as little as you need, but at the end of the day, with the ruling of the Supreme Court and what's changing, and I've said it before and I'll say it again, but now's the time to be proactive. Now's the time to talk to your controller, or even if you're the accountant for the company, reach out and say, hey, look, I sat on this webinar, and this guy from North Carolina who was hollering the whole time about Nexus and sales tax, made a couple good points. We might need to calculate tax in some other states. Right now is the time to really evaluate your current state and see where you may need to register and collect from that tax. And so, but we can definitely help. Please reach out to Jennifer or myself. I'll send over the slide deck. We'll put these links in here as well. You can have them, and we hope to hear from you soon.
Great. Thanks so much, Matt. Yeah, like Matt said, do reach out to either of us, and I'll put a recording of this webinar on our website, outoftheboxtechnology.com/Technology Tuesdays, and we'll post the slides as well, so you can go back and revisit, rewatch. I'm also going to have this transcribed, so if you want to see the words that we're saying, you can read that as well. I know everyone kind of processes information differently, so we want to make sure that we take care of you. Or just email us and we'll jump on a call and answer any more questions that you might have. That's what we're here for. So Matt, thank you so much for your time today. It was a great hour. It was a full hour. We're really excited to have you. And that being said, I just wanted to point out some upcoming Technology Tuesdays that we have, one of which is October 23rd. Matt's going to come back and talk to us more about Avalara, dive a little bit deeper how their tool can really help your business. But we'll be back in 2 weeks on August 14th. And like I said, every 2 weeks we'll be here. We hope that you check it out. These are all free webinars. And if it's something that you think might interest you, jump on. We'll be happy to have you. They all are recorded, so if you can't come at that exact date and time, just come back to the website about 4 hours after, and they will be posted, so you can watch those back at your convenience. So again, thank you all so much for joining us today. Here's my contact information. You'll all be receiving an email in a couple of hours with a link to the recording and the PDF of the slideshow, as well as contact information for Matt and myself. So thanks for joining, and we look forward to seeing you again soon.